Hey everybody, Day Trader Rockstar here with you, and today we're going to do a video on, and I was thinking of the proper name for this video, and I just came up with it. We're going to call it about adjusting your exits based on market trends, and understanding market trends and market direction. And when you understand the market trend, you have to adjust your techniques based off the type of trend you're trading in. If you're in a downward trending market and you're trading on the long side or buying, most likely you're going to have pressure on your trade, and it's going to eventually move down and stay with the bigger trend. So when you understand that and accept that, you could apply a couple rules that's going to protect you. So we're going to talk about those rules today, because this is very important. It's part of the HPS methodology, how to get out of a good trade, and when do you do, and why would you get out of a good trade? If you get in a divergence, and we talk about divergences so much as being one of the best setups, but we decide to get out. Why? So a couple of the rules that I take a look at, and I always, I stress this live every day on the show, daytradingradio.com. You could try a free trial there at www.dtr.tv/free, in case you're hearing this and you're not a member. You could try 10 days there for free, no credit card. So the situation when we come into the markets, we're looking for a certain combination of things. Talk about it all day to kind of give people a good understanding of how I trade and why we trade this way. We understand and identify trends. All right, here's a channel right here. You see that channel? I identify that right away. Usually by what we call the 1, 2, 3 channel identification method. You have 3 pivots, and then you automatically have a channel. You extend that channel out, and now you're working in that channel. You're always looking for reversals of a channel. So it's going to happen on the lower trend line, and it's going to happen with a divergence typically, or we would like to see that. And that gives us the high probability that the channel will break out. Very simple. That's the number one rule. So if you only wait for those setups, you're out of the market, 70% of the time probably, which is fine. That's the only way you're going to be successful, is only taking the higher probability zones here on long and short sides. It's going to give you a position here. Maybe it'll give you a position here. Maybe it'll give you a position up here for a short. Maybe it'll be follow this channel down here, and you might have a position. It's going to be in these channels. So we're always identifying the channels. And if that channel is a channel that's trading under the 200 period moving average, and again, we're dealing with the 1 minute time frame in this case. So we could adjust this to the 3 minute time frame, the 5 minute time frame, but basically everything applies to the different time frames. And I prefer beginner traders to trade with the 3 minute time frame, 5 minute time frame. It's going to be much slower, easier to track. The 1 minutes could be very volatile, and I'm going to show you why. Because if the market's in a downtrend and you continue to be a buy-side trader, meaning you like to go long in a downtrend, you have to take in consideration what that trend is about. All right, a trend is something that's identified by maybe a trend line, all right? A series of lower lows and lower highs, in this case, a downward trend. And we mark off those highs, and we're able to read those highs. This is our bigger channel versus the little channels inside the bigger channels. And that's really where our stochastics come into play. The 60-10 is our big channel. The 9-3 is our smaller channel. The move up in the 9-3 is from 20 to 80, goes from the trend line up to there, and then it comes back down, and this comes back down, and that bounces up, and that pushes back. So we're in a bigger downtrend where this is pointing down. The 60-10 is down or embedded. Whenever that is happening, and we're in a confirmed downtrend, and you can see the downtrend, and you're obvious, and you're not, fooling yourself. You're in a downtrend, it's light, and it's hard, and it seems to be harder for the upside. You have to, and that's okay sometimes to take your trades, but you have to get out. And you got to get out. You got to get out of your trade. It's not like you're going to pick the perfect spot where it's going to eventually break and move higher. Most likely, all these little areas that you're buying in the downtrend is going to push up, and then they're going to continue down. So you have to realize that, and you have to force yourself to sell. Or in the worst case scenario, move your stop up to break even, when you approach that 80 level. So if you even take a trade and say, all right, well, I have a trade condition, I have a quad rotation, I want to take it here off the trend line, off the 1, 2, 3 pattern or whatever. If you have a reason to get in there, retracement, this was not bad. And you get in and you get that pop, most likely, and that pop brings you up here about the 50, maybe that purple line. It did go a little bit higher, but actually that little higher was a divergence. That was a high, then a higher high, and a high, and a lower high, and that was a nice breakdown. So everything we point out works, but unless you're in it perfect and out perfect, you have very little meat on the bone to deal with. So that's the type of market you're dealing with when you don't have a big range, and you have to be exact in your entries and exits. And even if you're not exact, you should have the discipline to take it off. If you have and same thing with the bots. If you program the trading scripts to trade these things, you have to realize that instead of getting 8 ticks, 2 points, you might be getting only 4 ticks or 3 ticks. I see 3 lots of times. You get that bounce, but you get quickly overbought and it turns right over and continues down. You do get the signal, but you don't get the follow through. So it's very important to set the bots according to the trend. And according to the type of trend. Is it a tight trend? What's the average amount of time? Are you going from oversold to overbought? How many candles? That's basically how many minutes. So you could time things like that. But it's just as easy to look at it and say, all right, we got the overbought level. Each time we kind of pull back. We start to look for divergences. Even this divergence didn't really do much. I did see that divergence here. Moved up a little, kind of just went sideways. But the key here was, even if you have that divergence here, that little thing, once we got to that 80 line, if it's not, it's right there, right? You might even have something there. But that is your ticket out. That's your get out of jail free card. Because if you're not performing, by the time that gets up to the 80 line, most likely it's going to rotate over. You have to believe that, because that is the history. And denying that is gambling. Denying that is just ruining the whole method, and hoping, and saying I'm better than the markets. I'm smarter than the markets. Wait for that divergence. And when you see a good divergence, and we call this today, this was at 140. Do I have that here? Let me see if you could hear it. Again, I'm so proud of my Future Trade Alert networks. I think that's going to be the best thing in the future, because I'm focused on this setup. And if we talk about how well this setup is, and I know how to spot it in a friggin' perfect. And you get these explosive moves off of it. And sure, that we came up right up to a trend line, a 200-period moving average. That trend line's been there all day. I put it there, and I said, we have a trend line. I sent another alert out saying, you're up against your trend line here. You better just pack it in, call it a day. You got your profits, take it off. And sure enough, look where it comes back down. And what did we say? We said, what's going to happen is, I discussed the process of a channel and why, when we have a pivot and a breakout, what happens at that point. You have your first move and you have your first pivot. So the move and breakout now has developed a new channel, but we're only in the beginning stages of a channel. We need a 1, 2, 3 channel. All right. Excuse me. So we get a move up, just happen to hit that trend line right there. I didn't have this trend line up here yet, so I'm putting it together with you. This is what I'm doing. This is live during the show. I'm going, all right, now we got the breakout and we get up here. Take profits here. So we have, and we start to see it pull back. So all of a sudden we know we have a pivot here. So I'm saying, everyone, we have the pivot down here. What we're looking for is an uptrend. So to get an uptrend, you have a low, and you're going to look for a higher low. So that low starts down here. At what point is this going to be? Is it going to be here? Is it going to be here? Is it going to be steep? But we want to wait until it pivots out, and then we want to put that line in. All right? I'm losing my voice, sorry. So once we establish that, then we have 1, 2, 3. And then once we have 1, 2, 3, we take that line, parallel trend line, and we drop it right on top here. And that makes our channel. Not to say that we're going to even get up there, but it's always there for us as a target. And we know that we're in an upward trend line now. So we kind of got it going here. 3 o'clock came around. Now, there was also a rule here. It's our 2 o'clock at the lows rule. Lows at 2 o'clock rule. Right about 150, we were at the lows. And that's very close to our 2 o'clock at roll. And what that means is we tend to get a bounce between 2 and end of the day, 2 and 3. And then at the end of the day, last hour, we tend to rotate back and almost take out the lows. In this case, we started rotating back. We didn't get down to the lows. We actually bounced after that. And then Micron came out. And Micron now pushed the futures up nice for tomorrow. But this was the key here. And in this case, when you have a divergence, and you have such a steep divergence, and you have a 5-minute quad rotation divergence, this is a super signal. This is a super signal. So super signals, you really want to let that go, and you almost want to let that go until the 60 period gets overbought. That's the 5-minute time frame. So it gives us a lot more time. In this case, it took off real fast. It was easy to see where you should take it off because we had that downward trend line. Now we pulled it back, came back from the 200. Now we have that pivot, and then you start working with this. And up here, we had a divergence, and we had a double top divergence, and we called it. And it went sideways. It was kind of flaky. We had to watch out for a bull flag at this point. It was a very difficult trade into that flag, and probably wasn't anything worth taking. And most of the day it wasn't. And that's what I wanted to get to, because if you're going long in a downward trending market, you're going to have a long day. You got to really be understanding of your rotation. You take a long, your trend is down. The rule is go to playbook in your manuals, page 15. I'm making that stuff up. Page 15 in your manuals. The commandments. Thou shalt take off the trade at the 80 if the price is under the 200 and the VWAP. All right. And we're in a recognizable downward channel. These are almost bear flags. These are almost bear flags in a way that even though this is pointing down and slowly going down, this is good enough to know that that's very weak, and this is our rotation up. These are the flag, push down, flag, push down. That's another reason to get out on those rotations. So this is going to save you your life in trading. It's gonna save you, because this is a deadly market for long. Trying to catch a bottom here, and it's kind of tempting because you get into this channel and you're waiting. It's like, this is a divergence. This is, and it fails, and it's failing because it's in a downtrend. The divergence you want to see that's really is in a pullback in an uptrend, usually flag divergences like this. This is an uptrend, and this is the pullback, and you have a divergence. Then you get that nice breakout. When you have a divergence, and sometimes in a pullback, it doesn't get you want to take that off on the 9th. That's your get out of jail free, because if you don't, you're going to get something. You're going to get a little move up maybe. Here, that was our big move. Here was a sell. That was it. I mean, there was a good sell there. It took time. It was kind of frustrating. That was the best setup of the day. This was a little lip divergence, and we got a little move up. And again, hit the 80 and then rotated over. All these, if you took it off of the 80, it would be safe. And it would give you the right to overtrade. I would give you the okay to overtrade. Meaning if you want to try to take that rotation. But it's not worth it. You're not, look at the small move you're getting, You're not going to get the perfect entry. You're not going to get the perfect exit. You have to wait for the divergence. Here is a quality divergence at 11 o'clock. Sell side divergence. Nice breakdown. Eventually came back. That's why you're taking profits on the rotation. You don't have to deal with that little bounce. You're taking what you could get. You're a sniper in the markets, and you could do this. You could do it. And today was a hard day. And there's much easier days than that. Days that you have a big pop and you have a nice pullback and you have a double bottom on a big nice flag like that. And this is a little bit better. It's not really a divergence, but they're very easy to see, especially off the V. And then you're going to pop right out of that. This is a great setup there at 940. This is a great setup at 740. Very easy to spot. I was getting my teeth cleaned. But if you're in front of the computer at that point and you don't have the algorithms messing with you and stuff, and any serious news that's dropping, something very simple like that could really change. That's where you put the ES to work. Quad rotations overnight. This is a tricky divergence there. Well, we're not going to go overnight right now, but the setups are there overnight. The setups are there during the day. Today was a difficult day, and not every day is going to be an easy day trading. We're able to have the benefit of picking and choosing our trades. Don't try to trade a bad market. That's another important thing. The market's not, you're not feeling it. You're not feeling the groove of it. You don't feel like you're in tune with it. I'll tell you one thing, and then I'll let you guys go. I have to be, after a while, being sitting in front of the computer for a while, watching markets, maybe after a week or so, you're doing this, you start to get into tune. You tune it, you start to feel the market rhythm, and you could feel you could feel the internal strength. You become with the market. Not to sound too crazy and zen-like, but if I take a vacation day or something, I rarely take a vacation, but if I do, I can't trade for the next 2 days. I have to kind of get the feel of the market back. There's something about it. It's the feel. Is it an aggressive feel up? Is it a consolidation feel? Is it a sell the new? Is it like a pop and drop every morning? The market will start to tell you certain things. Now we're in a consolidation phase. We're in a strict consolidation phase. Slightly drifting. We're going to watch 57.50 as a first level. And underneath that, we could move down to 56.50 very easily. So, and 5,800's above us, and the market hasn't stopped, so it's hard to go against that. So the best thing to do, wait for the divergence, get on the Futures Trade Alert Network, become a member here at Day Trading Radio. Don't miss these trades. Don't overtrade. All right? That's it. I'm signing off. I hope you enjoyed this. And welcome to all the podcasts, Etienne's Desire to Trade. If you guys, I know I'm trying to do my best to onboard you. I know it's overwhelming, the terminology, the trading, the information, the charts, the stochastics, very, very new to a lot of people. You will not find anything better, in my opinion. You could take what you find useful and add it to your own system, or take it and improve it. It's going to come down to you as a trader. The setups will be there. It's going to come down to you being in front of the computer, being serious enough to push the button, being serious enough to take the profits. All this has to work together. Everything has to be perfectly aligned to be an expert at something. You have to have that discipline and the patience. It's not going to be easy. But that's what that's what we build traders all the time here. So I'll catch you in the chat room tomorrow. I hope everyone enjoyed this video. And welcome aboard if you're new here at Day Trading Radio. If you have any questions, you can reach me at ironaction@yahoo.com. That's ironaction@yahoo.com.